let's jump into things. It's 8:48 on Wednesday, 28th of January. So look, I'll start off with DXY because this thing it just continues to get absolutely pummeled, and it's one of those sort of things. Okay, yes, the technicals happen, but we were looking halfway decent for a nice little rally through here, and then really, I mean, this was about a week or so ago now, and we had the sort of the Greenland headlines, and of course it just sort of drops for a bit through that, and then breaking technicals. Anyway, whatever. We all know where that's at. The most recent lot of price action is obviously coming down to test these major supports. Held for a moment or two, but we just had a headline out a few moments ago, or maybe about half an hour ago now. And look, you can have a look and see see if you can pick where the headline came out. It was already sort of breaking down through this zone, but then Trump's come out and I'll find this thing. Here's the headline here. Seeking its own level, which is fair. It's doing great. I mean, I've said this a few times. Look, I'm a Trump fan, but is he retarded? In all fairness, I mean, you can't sort of look at anything. Like anybody could understand anything about. Anyway, so like you said, fall further hasn't declined too much. And yeah, you'll get people that'll come out and they'll say, "Hey, look, look at these things on a high time frame, weekly things. Hey, look, look at where it has been in the past. Yeah, going back to 2011 and all this kind of stuff." And yes, okay, it has, but you can't say that in this sort of instance it's doing great. It's on its way down, and realistically, we've got a potential to be heading to about 92 or so at the moment with this last sort of significant break, unless we see some sort of it's going to take a headline because there's no technical that's going to tell you to come back up over here, apart from the fact that we've got this little gap that sort of stayed open. So actually, let's just mark in that gap as we're talking about it. And through here, boom, and that's a gap. So we know that there's a gap that could be a potential target for this thing to find some sort of rally. Generally, I've said with these things, if it doesn't rally over the first day. Generally probably looking around 2 weeks or so for this thing to sort of potentially close the gap. Very rarely do they ever not close. So that is something to keep in mind, that there is a gap that's left open, which could be a little bit of a magnet. Whether that sort of turns out to be eventually this sort of trade, where we do come up here, close the gap, and then continue down to 92, or whether we go down to 92 a bit first and then come up. That remains to be seen, and that with it all. But certainly at the moment, it's breaking these sort of major sort of levels, and it is not looking too good for the old dollar. So it's really popped down here. We're going to be closing in a few minutes. We'll see how this sort of plays out. But if we can try and sort of find anything from this, I guess if we take these little highs down here, and we were to sort of say that this were a little bit of a channel down here, you can see maybe it's sort of finding some support here, but this is a very loose. I mean, you've only got 2 touches with this lot here. Look, when it's just getting absolutely bashed like this, there's 2 schools of thought. One, it's like, okay, that's it. Anybody that was still long, well, they're taken out now, because these were 2025 lows. And now we'll sort of, again, we go back to the high time frame to sort of see when we were last back here. We're going back to, let's move this out of here. I think it says 2022, doesn't it? Yeah, so back to sort of like 2022 levels. So yeah, certainly anybody that was potentially trying to sort of hold these things long, well, they're clipped out now. So you might see some sort of little reprieve back up over here. But as I said, I think the fact that you've sort of come down and closed down outside below this sort of wick area down here, this thing's been absolutely pulverized in the last 2 weeks. Let's just have a quick look. So far, I mean, that's a 4% decline. Excuse me, 4% decline in not even 2 weeks, because of course it's only Wednesday morning now, so we've really only had 2 sessions for this week. So in 7 sessions, it's lost 4%. That's a pretty sort of sharp little smackdown. So things go from bad to worse, but for the dollar, but that's all right. Obviously we can just sort of trade the other side of that kind of stuff as we sort of see fit. But I think the sort of the wrecking ball dollar story, you got to be pretty much set to the point that I think that's cooked for now. Where's it? Get rid of this thing here. Clear it up a little bit. So, everything up like that. Okay, yeah, so where to from here? Well, I guess sort of like, so obviously we've got a little bit of support that's sort of come in at this point over here. So we'll just put this and say, breaking, this will be breaking Trump comment lows. Down further. So yeah, okay. So that's if we go down a little bit lower there. Yesterday, just to unpack things, we did have that's the thing as well. Like through Asia yesterday, we had a fairly decent little pushback as well. Like a little sell down first, grinded up, came and sort of tested these highs here, like pretty much right to the point. As you can see, we had that little zone. I had that little zone set up right through here, and after that, bang, just got hit. A couple of things with this as well. We had that sort of rate check is what they're sort of saying at the moment. Basically, BOJ and sort of yen sort of intervening kind of sort of story, or say intervention kind of sort of story, with the Fed supposedly selling the US dollar to sort of like buy yen to help sort of stabilize that currency. And there's a number of issues that's not issues, but a number of sort of potential positives for the broader sort of market if they can sort of stabilize the yen a little bit more, because of course, you've got the whole sort of carry trade argument, and if the carry trade sort of starts to peel off, then people start to sort of sell off assets to cover those positions as well, and that's when we sort of like see ramifications through to other segments of the market. So probably like the sort of like equity markets and that as well. But I think as far as I'm aware, the equity markets. Let's have a quick look. I think they're pretty much at their highs, aren't they? Yeah, pretty much. Scratch off the highs. I mean, what are we on 1 hour here? Go daily. I mean, really, it's consolidating up near the highs here, isn't it? Nikkei's pull back a little bit, but still up there. Nazi's breaking out. Look at this little fake breakdown and so moving up. So, these things, I don't know, honestly, what is ever going to sort of stop these things. It just seems like, particularly the weaker the dollar gets, the more sort of like, people just look for anything else other than being in the US dollar. Anyway, so, as I said, sort of a bit of a disappointment on that, and Trump sort of leading it through. So, look, these kind of things, obviously, the bulk of this last sell down here was that Trump comment. It was kind of stabilizing, bangs dropped down. Okay, it's holding around here now. Any sort of rally, maybe up towards 96, 96.10, that kind of thing. I expect probably to sort of be met with some selling back down, but it's a funny time of day, and it's also a lot earlier than I typically do the analysis. So we can just sort of give it a few hours to sort of see how this thing plays out. Maybe potentially see some sort of powering of this, but really, if we look at this on a daily, it's just been absolutely clobbered. It is oversold. But you're not going to be getting any sharp reversals, in my opinion, on this. If anything, maybe sort of like, in a week's time, we see a bit of a rally. But I think this is going to have to sort of consolidate down the lows before we find any sort of actual sort of bounce-ish. Have a look at gold. Gold's just continues to sort of power on. And it's funny, this is exactly what I've been talking about, these little top signals. I said it the other day. I was pointing it out on the silver chart. But as I said, to me, it seemed a lot more prominent on the gold chart, where you get these sort of moves up like this, you get a big top wick like this, and you would think, okay, from a technical standpoint, here's a top, or like at least a rejection, maybe a double rejection, and we can start to see some sort of cooling. It's overbought. This is on the daily, and it just eats up that wick, and just bang, closes right out the top over here as well. So right up just underneath 5,200. Now this thing was actually breaking out prior to those comments. So if we have a look here, so the comments were I think just here 7:45 or so Melbourne time. So as you can see, look, it was respecting the technicals quite well. So I did a video in European session yesterday, and I said, look, 60 was the line to watch. Where's that chart gone? This was the chart that I put up. I said, look, we're around here at the moment. I said, watch for what happens at 60. Because if we see the buyers step up at 60, then we're consolidating in this top little section here, which we obviously ended up doing. Look for this big candle out the top, because that means we're probably going to be going higher. A close underneath 60 would have opened up to a potential range and most likely sort of a bounce. As you can see, this was the idea, the plan. Should we had we have got a close down underneath 60 to potentially find some sort of range here. But as you can see, the buyers are sitting here. They've moved up their bid to here. They're applying that pressure, pushing up over here. You got a straight line with the sellers, and eventually, bang, it gave way. And then just on top of that, you had these headlines, which got it another, $100 or something up the top. Or sorry, another $50 or so up there. But look, it's pretty much just done $100 sort of breakout with it all at the moment. So onward, upward for gold, it kind of seems at the moment. It seems to be outperforming silver a little bit. So if we have a look at silver. Now, silver, I was looking at this potential sort of diamond top playing out. Now, I'm not a big fan of diamond tops. I don't really ever sort of trade them. I try to sort of like, well, I might not try to, but every now and then I tend to sort of see them and go, look, in theory, like this is kind of a bit of a consolidation, blow off, sell down, back up here. In theory, that is a kind of diamond top, as far as I'm aware. I was playing more of the idea of this potential little flag, and it was coming into this pinch here. We broke it, retested the underside, made that lower low, and caught a nice short down through here. And this was about $5 or $6 this move down here, which, you look in the scheme of things, okay, yeah, it's only a blip, but that's fine. But, that's still, for me, particularly a decent sort of trade. So you can definitely sort of do quite well if you catch a $6 or $7 move. Anyway, the point is that, it came down, tried to have that second effort to get back underneath, but obviously unable to. So buyers had slowly moved their little bit up here. So this is what I talk about with these sort of three waves and that. So, you've got your little arrow's gone. You got your move down, you find support, you move up, you find resistance. You're always going to get this third leg. And this is the third leg that's going to give us higher low, double bottom, lower low. In this instance, obviously, we've got it'll be a very small, higher low. So it puts the emphasis back on this high, on these levels over here to see, are we going to get potentially the forming of like a range? Are we going to get just a sort of a bit of a triangle with lower highs and higher lows before we see continuation? Or is it just going to blow back out the top? And boom, obviously, we got the ladder sort of blew back out the top there. So, yeah, as I said, once again, diamond top, kind of fail. But, as I said, in relation to sort of gold's, now this doesn't really sort of mean a whole heap in the context of everything at the moment, because I've seen gold and silver have kind of just been passing the strength back and forth between one another. Like we'll see silver, obviously, 10 or 12% in one day, the other day. Gold, I don't think, was sort of producing quite the same. They both sold down, but now gold's exploded to the highs. Now silver's lagging. So, it goes back and forth with it all. However, we aren't seeing silver massively break to the highs, and not even just off that headline. That headline was about here, and you can see it was a bit of a move, but, it was already moving up. So 10.50 up to $13. Which, again, is like, had this been 6 months ago, a year ago, that would have been like, wow, monster, something's going on. Now it's just like, it's a little bit of a blip. I mean, yesterday on China Open, where was it? I think it was this one here, $5 in 5 minutes, and just went straight up through there. Anyway, so what we can kind of do is to kind of make this one's a little bit sort of null and void. I'll keep it there just for the time being, but what I'd sort of probably be more looking at now is potentially this kind of setup. Which is a bit more of, I can widen this out a little bit, a bit more of a triangle. Seems to be sort of forming a bit more than this sort of, diamond top kind of thing. As I said, I pretty much, I never trade directly just off a diamond top, and that to me they seem a bit sort of hocus pocus. I'm sure they work, and there's lots of sort of examples of how, see, here's a diamond top and it rolls over and all this kind of sort of stuff, but anyway, whatever. In my opinion, this is just yet another reason that it's kind of failed. But this is looking fairly much like a sort of bit of a little symmetrical triangle. So, really, we are just consolidating this top level over here. So let's drag a couple of these down. I'd say that's where you're kind of looking to go any lower. That's where you potentially look any higher. These are kind of more what you call your swing high and your swing low let's actually get rid of that. Let's just keep chart a little bit cleaner. I would say below 105. We're at 112 right now, so obviously top side there. So look, if this were to be a triangle to be sort of played out, we could potentially sort of see a move down here and then break to the top side up over here. Should this sort of come down here and then continue down, just breaking this rising support is not going to be enough. You want to going to see it get underneath 104, 105 really. Excuse me, those dip down lows to see this thing sort of move a bit lower there. But I'd be reluctant to sort of necessarily buy it straight off the bat. Certainly above sort of 113.60, you're pretty much right. You're set to sort of challenge the highs. So, you know, you got your swing high, swing low. That'd be really where you're kind of sort of going to get make or break for silver at the moment. I mean, again, in context, it's all just super, super bullish. So, you know, even a consolidation favours continuation, so we could probably see more sort of upside with silver there, certainly. But as I said, this little triangle, typically I would say that triangles tend to fill out a bit more than we've seen them recently. So I wouldn't be surprised if we do see some sort of pairing of this. This could come at the same time as maybe we see a little bit of a sort of a bounce off the potential channel bottom with DXY that I was sort of showing earlier. But I think certainly if we get a move down to say 107, 107.40, and we see this progression of buyers, which are just here, if we see a continued move, whoops, do this. If we see a continued move from buyers like this, I would say be getting ready for your breakout and that, because you're seeing that they're obviously applying the pressure and they keep moving up along the sort of bottom support here. Should these buyers and these buyers not be here, that's when you're going to get that sort of move down. And I think that sort of illustrates it pretty well, because you know it's not just this one segment of buyers you need to deal with. It's these horizontal mob here at 105 as well that need to be sort of taken out. Again, if you just go above sort of 103.80, 103.60, 113.60, then you're pretty much set to be challenging the highs, and obviously that big breakout is going to come with the big blue candle sort of through that 118 up to 120, and then of course, you know, you're looking up above wherever you're looking there. So yeah, it'd be interesting to sort of see how things go. Obviously, you know, it's early in the day, so and you know, metals have just closed, and we're not really going to see much volume through till you know, in China open. So we'll see how it goes. I mean, look, this thing could gap up here. If it opens up over here, then you're probably just going to move up there. But I think that's pretty much above 1360. Put a little alert on that. Going to challenge. Going to challenge the highs. The only thing, as I said, of the metals that it didn't really it was like, you know, metals were sort of recovering a little bit prior to those comments anyway. Gold was certainly a bit more of a beneficiary than silver was in that regard, but you know, it's still lagging a little bit. But again, as we've seen a number of times, it doesn't really matter a great deal if we're seeing one lag over the other. Probably more the way to have traded that kind of recently is to pick who's lagging and expect them to then sort of play catch up. Because as I said, we saw silver sort of explode 10% the other night. Well, now we're seeing gold sort of obviously explode and take the lead there as well. But I think certainly if we do see a move back down through Asia, down to that 107.50 to 108 area, and we see the buyers continue this push up higher, I'd say that's your early indicator that we're probably most likely going to be at least minimum challenging the highs around 117 or so. So, 107.30, so watch for buyers to step in. Alright, and where we go? Did I cover gold? I did cover gold a little bit there, but look, I think sort of, you know, we got that big breakout. It's shot up here a little bit more with it all. Look, again, with these sort of things, you could say if it's going to sort of, if you want an entry with this, it's very hard, and you miss the boat. I can attest to that a lot of the time to sort of miss these things and that, but just from not just closing your eyes and buying. If you were to get some sort of buy, If you're trying to sort of get some sort of structural entry, I would say around 51.10 to 5100. That's the area that you want to see the buyers move up here. And do we have like maybe a little angle here as well? So potentially something along like this. But again, you really just sort of run the risk of having this thing run away from you. It just depends how they want to sort of take it. I mean, look, the dollar's been absolutely bashed. This was breaking out prior to the dollar anyway. Well, prior to the Trump comments anyway. So it's not really like that's the cause of it. It was already just by its own volition, sort of breaking higher. But structurally, if we got to move back down to around 5100, I imagine you get some shorts closing on that, and the shorts closing would definitely be meaning that you'd be moving like this, at least back to sort of tackle if these are these highs, these kind of levels over here. Again, look, this thing could gap up and open up at 52.20. I don't think we're going to get any sort of massive gap up on this today because obviously you've got the big flow of breakout. So any sort of stops along here, they're hit. Anybody tried to fade that, well, then you had Trump comments. That's a hit over here. So I wouldn't be surprised if we do see some sort of cooling, at least through Asia, in these kind of in these moves. I'll still put this over here now because should this ever sort of come back to this 5,000 level, that's what you're going to see that sort of break back down there. But certainly at the moment, I'm starting to sort of think that unless we get some like incredible just blow up top, which I don't think we will, because as I said, you got to think sort of while this thing was consolidating here for 2 days or whatever, it's building up stops up over here, and that's what got this big blue candle up through here. That was stops being hit. People tried to fade it. Maybe they had the stops above it. Bang, said Trump comments, they've been taken out there as well. So I wouldn't be surprised if we do see some cooling through Asia, just in that regard. Move along, we've got Aussie, and Aussie's a big one today. Aussie has, there's no words for Aussie. It is absolutely just exploded. Look at this move. I mean, even just yesterday, I really didn't think we were going to get this breakout here. But one thing I did notice though, if you look at this on a large setup, now, I wasn't playing this as a head and shoulders. I said, look, as long as it's under this, I thought this was coming as a bit of a descending channel where we're going to get a push down here, hence these little arrows, to sort of maybe get long around the 64 area, 66 area. Obviously didn't and exploded higher, but look at this setup here where you got potential, head and whatever you want to call it, head and shoulders, if you want to call it descending triangle, however, like the same chart, just depending how you cut it up. Look at this on a smaller setup as well. Well, this was what I was saying yesterday. Again, look, it was at one stage to about here, looking like a little head and shoulders there as well. This is a big 2 year resistance, and yesterday it just took off. Sort of stuffed around here a couple of times, got close to closing the gap, didn't technically quite close the gap, got very close to it. But then it just turned around and ran 100 points in the other direction. Look at this. 1.67% on the day prior to a large bit of news coming out today with CPI. Now, Bullock's been sort of touting for months and months and months that this is the one. This is the quarter on quarter CPI. And RBA is pretty much in the point of, yep, we're going to well, I mean, actually, no, they're not in the point of anything. But based off the jobs numbers, the market has pretty much sort of said that, jobs have given it a green light to cutting if that's what's needed. If the CPI, hiking, sorry, get my stuff right, hiking, if that's what's needed to address a potential surging or continued sticky CPI. And the quarterly is the big one that she's sort of been going on about, and that's what we've got coming out today, of course. So if we see, I would say you'd have to sort of see it, but given how big this move is, because remember, a lot of these things get priced prior. Not a lot of everybody's waiting for today. I mean, there's a number of factors driving this thing. Obviously, metals going through the roof. US dollar getting absolutely pulverized. So, it's already sort of moving off this kind of stuff. But into the mix of this move as well, you also have, people pricing for RBA to be potentially hiking. The possible outcomes are obviously a surge in, which a tick up in CPI is going to keep it bid. As to how much more it can go, I don't know. It feels very extended, like very extended at the moment. I feel that it could be more of a sort of buy the rumor, sell the news kind of event, because this is certainly a big touted like data event for Aussie and RBA. They've bought it up very massively prior to this, but they're not making the rate decision today, of course. This is just like, what Bullock's been saying that, hey, this is going to be the big factor. We had the jobs numbers, which really were very strong, which, again, there's the two mandates. There's the jobs on one side, so employment, and then there's the inflation on the other side. And you've got to balance the two. The way that you sort of react to both of them, or the way the central bank reacts to both of them, are complete opposites. But it's just a matter of which one's at the forefront. We've been seeing this with the US, where jobs have been very much at the forefront for ages, and that kind of seems to have a little bit dropped off a little bit at the moment. But in regards to the RBA, well, job numbers were super strong. So if the jobs are super strong, it just sort of means that basically the RBA's thinking, or the market's thinking about the RBA's thinking, is that, well, should they need to hike rates? Well, jobs are really strong. People are employed. People, in theory, have money. So they could withstand a hike. So that's one sort of lever ready to be pulled in terms of the hike. Now, the balancing act is the CPI. And if the inflation comes down, then the necessity to hike or hold rates and that isn't there as much. So it's sort of like, should they need to do it because the jobs are sort of strong, they're ready to do it. If the other side comes in and inflation's very hot, well, that's requiring, sorry, can't even speak, requiring, anyway, whatever, it requires, geez, I need another coffee, I think, requires them to sort of hike. Definitely need another coffee. So anyway, long story short is there's potential for this to be a sort of buy the rumor, sell the news kind of event, and that this thing has absolutely taken off in the last, couple of sessions. Where are we at here? I mean, that was 1.73% there in one day, which for FX pair is absolutely massive. In this straight breakout move here, it's just run 5%, nearly 350 points since the 19th in the last 9 days. That to me feels like a buy the rumor, sell the news, particularly if inflation comes in cooler. If inflation comes in cooler, you're going to see a lot of people go, shit, we were banking on the idea that the RBA is going to be hiking based off strong numbers and hot inflation. What if it comes in cooler? If it comes in cooler, well, that takes away the necessity. That's the flip side of this sort of thing, and it takes away the necessity for them to be really sort of acting very harsh and very quickly on hiking rates. So that's the sort of consideration for Aussie in that at the moment. If that does happen, is it going to come down? It'll probably come down, yes. And if it is a buy the rumor, sell the news kind of thing, it'll also sort of come down. I think the risk is more to the downside here that, should it come in hot, buy the rumor, sell the news, maybe we get a spike up and then push back down. Should it sort of come in cooler, well, you're going to see it come off. As to how low, I reckon you could probably look to almost sort of undo yesterday's move. Below that, I think you're going to have to then start to sort of factor in the overall weakness of the US dollar and the strength of the metals. But while the metals are still strong, while the dollar's still weak, if this CPI print that comes out today does lead to a pullback in Aussie, it's not going to sort of mean, hey, it's over and it's coming back down to these levels over here. But I think certainly this could be a little bit of an over-exaggerated move. Running sort of 5% in 9 days is very much pricing in this kind of hotter CPI. So if that fails to deliver, I reckon you could probably look to sort of close that gap at least, and see what the buyers do as they sort of come up along this line down along here. So it means there's still sort of buy opportunities, but I would be reluctant to be sort of buying this thing prior to it, based on the idea that we might get a sort of hotter print. You know, the profits and those sort of things are for the people that have been buying this breakout through here and positioning themselves for the last 9 days, and they've just taken 5%. So if you've taken 5% in 9 days, you know what I mean? Can it just go up another higher? I don't know. But, you know, I mean, we've got a major breakout, needs to hold this. So I think minimum a test of 69.40s down to 69. They're the two levels that I think it's got to hold. If it doesn't hold 69, then I think we could be in for a little bit of a deeper kind of correction. It's 100 points off at the moment, so it is a fairly big move for the Aussie to come down 100 points. But that gives it room for it to sort of really come down. Buyers to go, okay, yep, we've done that little moment, that's out of the way, and push on up there. But CPI is definitely going to be on the cards for the big mover today, which is just in over 2 hours. And finally, just have a look at Aussie yen. Aussie yen sort of come down here. If I put on the 4 hour, you can see it's held that sort of support, double test down here. Now it's really sort of in this wait and see moment. It's just consolidating the lows here. You've got it seen, this is the thing, you've got Aussie against US dollar in that, and as I was saying that, you know, you've got to factor in not just this sort of like CPI print for the Aussie, because, you know, if all things equal, Aussie against the yen should be up over here as well. But we've got to factor in the potential for more yen yen buying across the board, which is really sort of a tug of war with Aussie down here. It doesn't seem like the BOJ are really going to do too much. I mean, I say that, but I mean, it has dropped off a fair bit down here, but really sort of consolidating down here. Below 106, above 107, give or take a couple of points, I think it's going to give us the direction here. But as it is right now with this three wave, 1, support, 2, resistance, 3, tries to come down, double bottom, and this is what we've got, a little bit of a consolidation at the lows down here. Now, if you were to look at this just in this kind of action here, consolidation favors continuation. So in this instance, it is pulling back, consolidating, favors the downside move. So I wouldn't be surprised, particularly if you get the combination of another round of yen strength due to the sort of BOJ Fed kind of cross, and if CPI fails to come in super hot, I think that sort of gives more of a downside risk to the Aussie yen, and I would say sort of around 104, 104.60. 104.50, 104.60 would be a nice area to sort of look for potential buys down here, but I certainly think that this potentially has another leg down. All right, that's it from me.